week market analysis and looking over what has happened on the dollar in this past week and what are my projections for the week coming up and how I'm looking to deliver from Q1 into Q2 and the true year opening and things like that. And we're just going to go through this and we're just going to have fun with it. Okay. So without further ado, let's get started. But before everything, you know what we always do. We always pray. Dear Heavenly Father, we thank you for this day. We thank you for everything that you've done for us. Thank you, Lord, for providing us with this skill to allow us to be able to provide for our families unlimitlessly. We thank you for for these riches and prosperity that you're giving us, and for this knowledge that you are um, endowing us with and allowing us to be able to read this market, to be able to understand what is really happening. Lord, we pray that you'll be able to bless this session as we go into what is going on, and that you'll help this to be able to be delivered with clarity and understanding, and that you'll just be in the midst, Lord. Um, Block all attempts from the devil for any type of disturbance, and that you'll just give me the vision, the to see the market, the understanding to the knowledge and understanding to deliver this in a understanding and concise way uh, to these students. We love you and thank you for everything you've done. It's in your precious and holy name we pray. Amen. All right, guys. So here we are on this dollar chart, the daily chart. Um, we, I want you guys just to take a good look at this chart on the daily chart before we get started. We're going to start at the monthly chart and go over some things. And then we're going to come down to this daily chart and I'm going to talk about the cycle that we're in and exactly what I expected earlier, where we delivered to, and what I had spoken about with one of my friends in the chat, um, a student and good friend of mine. So I spoke about some things that has happened and where the delivery was, and everything has happened as expected. And we're just going to walk through this market so that you guys will have a clear and concise understanding of this price delivery. And I want you guys to always remember we're trading price. Patterns are there, but price is the key focus, the numbers on the side, right? These numbers, we're focusing on these numbers, but reading this chart to understand where in these numbers it's going to deliver and in what time it's going to deliver, because there are two aspects of price: time and price. Price delivers in time, right? So in reality, time is most important. Price is delivered effective to time. Remember that. Price is delivered effective to time. Price cannot deliver without time being the first aspect, right? All right, so let's go to our monthly chart. Now, once we go to our monthly chart, right, we're going to do this every time because I want you guys to see this. You can see that we are in an impulsive range, right? We're going to start out with this. This was we're going to make this, my monthly is always pink. Just so you guys see this, we'll make this, that's our high. And this was our low. Let's use that high swing. This is our high and our low. This right here is, if you guys know, say it before I say it. All right. Well, this right here, guys, is our dealing range. This is our original dealing range, or the original consolidation. right? You have the um, accumulation, the expansion or the manipulation phase, right? Price will consolidate, expand around this range, right? And then it has a payout cycle or the impulsive range or the distribution, right? The distribution is the impulsive range, what I call the payout cycle. This is the area that we want to be in, right? This range will give you an idea of the full expansion of this range. It will give you an idea where this range will expand to, right? And deliver, and where this range will deliver, right? So as we come here, we see we have a previous expanded range, right? So we can take some fibs and we can go from our high, our low to our high. Now, what we're looking for is an area of 50%, right? Now, with this 50%, what are we trying to find? 50% does what? I want you guys to get this in your head and understand this. 50% is the equilibrium. What is equilibrium? Equilibrium is when price is balanced in the books, where there are neither uh, buys or sales that are um, unbalanced in the market, right? Let's say it like that. Under equilibrium is balance. Remember that. Under equilibrium is balance inside of the discount range, right? Now, what we're looking for is an area where it comes into a discount range, right? Under the equilibrium is the discount. Above the equilibrium is the premium pricing. So we're waiting for this to expand under this equilibrium, right? So let's mark that. We can mark this, right? 50%, 189471. It's very important to be accurate with price and understand the accurateness of price, because price is delivered to specific levels, right? Now, what we're going to talk about is here under this, right? Under this equilibrium, right? There is, well, at this equilibrium, there's what? There's a for value gap here, right? So we're going to mark that out so that you guys see what what I want to train you guys on is understanding the area that price delivers in, right? So we're going to understand the specific range that price delivers in, right? So this is a monthly fair value gap, right? So we have our monthly fair value gap that price delivers in. Now, this is where I like to have a better understanding of the market. And I want you guys to understand this because price will always deliver into these ranges. And if you can understand this concept, I promise you will get the best sniper entries, right? So you see the for value gap. Now you see how price wicked through that for value gap. This was liquidity. It came through with this bullpen hammer and wicked through that fair value gap. Now, where exactly did it deliver? Well, it delivered in this specific range here, from this high to this low, the high of this candle into the low of this candle. What is that? ICT specifically talks about these right here and what they are, right? That is a balanced price range, right? So we will mark this here as a balanced price range. Now, remember, we're under equilibrium inside of a discount area. In an area, there is a for value gap that's here, right? We need to adjust where this for value gap goes to the low of that candle there and the high of that candle there. We have delivered inside of this for value gap. Notice the bodies respect the fair value gap, but this can be your sniper entry. Now, this is your balanced price range. That balanced price range is where price has balanced itself. Now, what I want you to understand is inside of this balanced price range on a lower time frame is a PD array. Most likely it will be an order block, right? Now, what makes this a balanced price range? This balanced price range is here because in this particular um, balanced price range, let's look at something that occurred, right? And you can see that price will not go below this candle's low, and we'll talk about why. So what happened is price expanded up from here out of this volume imbalance. See this volume imbalance right here? Notice there are only wicks, no bodies here. This is a monthly volume imbalance. So the volume imbalance, the algorithm gathered liquidity here, repriced up to this area, right? Created a high. Now, when this month opened, it opened below the closing. It opened below the closing, which lets us know that the opening of this month, we will not go below it. Now, if we opened at the closing of this candle, we would have went below it into this area where there should be an order block. But below this opening, we should not go, right? So let's mark that opening here. Let's put monthly open, right? This is a monthly open. Very important that you mark that, right? Now, the reason why this is a balanced price range again is because price left this volume imbalance, traded up, created a high. Price open and traded down. This creates a open low, buys up to create what? A imbalance or a fair value gap in price, right? Creates a high and a close. Then price proceeds to auction higher. It opens above the high, creating a volume imbalance, right? This is a runaway volume imbalance where it's going to run up hard. And you see how we have a hard expansion up, right? And then we come back in. So there are several types of balanced price ranges, right? But this is one type. And the best way to view these balanced price ranges is when you see a fair value gap under in a discount area with this balanced area here. Now we're done with the monthly, right? We'll be done with the month. We'll be done with the monthly here on this. Now let's go to the weekly and we'll understand something here in the weekly. Again, remember, we will find a down closed candle here in these wicks somewhere. Now in the weekly, these are still wicks. This is a weekly rejection block, right? An area where it gathered or accumulated price, right? You see how we had this accumulation. So you see even there is your down close candle. There's the rejection block there. Or you can go to the lowest close candle, right? But let's go down to the daily and see if we can get back over there for the daily. So as we get over here for the daily, this is what you see. You see how we have this swing low, imbalance right here to that low. There's your imbalance, right? Now, you see how these continuous up candles break this high and then accumulate and keeps running, right? This here is what you're looking for. That's your liquidity pool. There's your fair value gap. Inside of a higher time frame fair value gap, there's the accumulation and the balanced price range inside of a discount area. So again, what can we relatively understand? That this candle has a low. You can come into the high or opening of this candle, right, as your idea for a buy. So you can look at that as a daily bullish order block, right? And you can see price delivering down into that daily bullish order block, right? You had your run on liquidity, runs down into it. Right now, most likely, you will see this on the 4 hour. I don't do all my charting on trading view, so it might not let me see all the way back on this 4 hour. Yeah, okay. So what we're going to do, we're just going to stay on this daily, right? So you understand that it delivered inside of a daily order block, right? You had the take a liquidity down into what? A fair value gap, balanced price range below. You had this monthly open down here with a daily order block right above it. Your stop goes below there. Now look at this. You see that is about a 30 pip stop, 28 pips or 30 pips, or you could do it there, 20 pips in reality, right? There's a 20 pip stop from the opening to here, 20 pips. Now, what does price do? It expands and does what? Breaks this swing high that it created before this take of liquidity. When you see this, this is the market structure shift. Now, if you've been watching my previous videos, or if you've been a student of mine, there's something that I always tell you that happens after the market structure shift. What is that? Optimal trade entry. So let's look at that optimal trade entry. We can go from the body. Remember, we take it from the body of the low to the body of the highest candle, right? 9667. So we're going to extend this out, right? 9667. Now look at how price respects that 79% retracement level. Now, there are other factors into this. We have a daily order block here, right? Daily order block with a inversion. This is something different. ICT hasn't talked about this yet, but if you study your charts, you will find arrays that he hasn't talked about, and you can mark these up. This is the inversion volume imbalance, right? It's also, you could use it as a fair value gap, but this is truly understand that a volume imbalance is a type of fair value gap. It's just different in the way it's delivered. There is no bodies there. There's only wicks, right? So look at the inversion fair value gap. Inversion volume imbalance at the daily order block. So this is a inversion volume imbalance. And look how there is another volume imbalance from here to here, right? That gives you extra confirmation that this is a high probability order block and a high probability. There are three factors. Look, you already have a great number of high probability confirmations that this is your area. Now, you could wait for price to do this and come back and deliver into this area. These are your high probability areas, right? High probability, right? Right in this area. So you can see how price delivers. This pattern here is fractal. It happens all on the lower time frame. What you do is you can look for markets with this setup, and this can be your entry. This is your turtle soup entry. This is your re-entry. It will give you 2 chances to re-enter before it actually pulls off, right? So this is a Wyckoff schematic right in here. If you wanted that, right? This is your spring test, the push off, right? Sign of strength, comes back, takes the liquidity on the low, the spring test, got your buy up, right? So we could look at it that way if you wanted to. There's several ways to look at this, right? Remember, the algorithm incorporates everything. It's not that it doesn't incorporate everything. You just have to understand where to put those things inside of the algorithm, right? Again, I talk about that, the divine algorithm, right? So, anyways, these are ICT's precision concepts. Shout out to him. This is your inversion volume imbalance again, right here with a normal volume imbalance, high probability, right? Now, what happens again? What do we get? Another shift in market structure. What a shift in market structure is a break of a high or a low, right? So with all, see how these are all black candles or all bullish candles for me? These are my bullish candles or my black candles. So this is all bullish area. What does it create? An order block right inside this monthly FVG at the equilibrium of that range that we looked at, right? The equilibrium of that range. Now, what else did it deliver? Right here, look at this right here. What did we just talk about that this was right here, right? You see what this was right here? This is another one of those, what? Balanced price ranges, right? But this time, what did it do under this balanced price range? I want you guys to see this because this will make sense. See, from this low or that high to that low is a balanced price range right here. Now, under this, since this is a hard expansion here, this could be a pool of liquidity when you go to the lower time frame. Let's go to the 4 hour, see what it gives us on the 4 hour. And then we can understand how it will deliver these pools of liquidity, right? So maybe that might be just out of our reach, and it is. Tell you what, guys, I'm going to next time I do a video, I'll upgrade this so that you guys can see everything. I usually don't use TradingView. I'm usually on the other platforms because I can't trade on TradingView. I come to layout charts sometimes, but I don't have to see all this all the way back here. I can usually use where I'm at, but I'm just trying to give you guys an explanation of really what is going on. All right, so anyways, let's look here. We see this gives us another daily order block with this balanced price range. Under this balanced price range, inside of this candle here, when we had this expansion out inside of this down candle, this daily down candle or this daily up candle here, there's an order block or a POI on the 4 hour time frame that will give you your entry. But you don't need any of that. All you need is this order block, the opening of that order block, and your stop placed below 50%, right? That's all you need. There's your 50%, right? Your stop is placed below the 50%, right? Here's your 50%. Here, let's do this even better. Order block fibs. So you only have your 50% there, right? You can see it come into the 50%. Your stop is below that 50%, right? Typically under the 618, if you can see it. If it ever comes about, it'll be under the 618, right? You get a run of liquidity, the turtle soup. Remember, before price moves off, there will always be a run of liquidity. There will never be a time that price doesn't expand without creating a point of liquidity and running that liquidity to then expand to the upside, right? It will create liquidity and run that liquidity. It always does that. It generates and runs. This is your optimal trade entry. Again, you could use that body to body, right? Here, see how it respects that 79% retracement level. Again, this is an area that I use from the 935 to the 835. When you have something like this in a pool of liquidity, you can look for this delivery on this 835. We'll talk about that later and go into more detail, how it came up with that, right? So there is your delivery, right? Now we currently have delivery all the way to the upside, right, on our daily time frame. So we knew that price delivered all the way to the upside out of this range here, right? So what I want you guys to see is if we take this high to this low, we're able to get deviations on how high this might. So we'll take our deviation fibs from the high. Let's go the other way. So we're going to take our deviation fibs and go from this first low to the high right here. And here, this gives us like a 0.5. I don't have 0.5 marked on here, but you can see it here. Let's create a box, right? Right, there's your 0.5 standard deviation above this. See how it comes up into there, 0.5 standard deviation. And then it gives you like a 1618 delivery or a 1.5 standard deviation down, right? That's another it's another 0.5 standard deviation to the downside. You see from the low gives you a 0.5 standard deviation. Look how the bodies respect it, right? We expected the wicks to do this, but it gives you that deviation. Now, you should be able to see how price will expand. Oh, and again, you can use this total range. I did find something when I used the total ranges. I'm sorry. So let's do something here and make this. What we want to do is find the bodies. So you see how this is the body, or you could we'll do both. But usually I try to use this body, and sometimes you can use the lowest body. They still should both give you an idea, but we'll do both just to showcase them. Usually the bodies will give you the best idea of price delivery, since that is the bulk. The bodies will give you the best. So what we want to do is take from this body's low, all right, to that body's high, right, and it will give you a idea of the expansion. See how it goes into the 1.5. Here's it with your low, right? Here's it with your other low, right? So you can understand that this range will give you an idea of the deviations to where we will expand, right? Your original range, right? Now, as we see that, you want to notate the, you see here, we're at $1. Do you see that? So price is at a certain point, a deciding point here. This is what I want you guys to also pay attention to is that price at a deciding point. You see that? It's at that whole dollar mark, right? Now you can see that price expanded to 300, should have been 300 pips above, or 350. It might have been at 400, but I don't think it quite reached that, right? But you can see where it'll span 3 to 400 pips above, and then it comes back below that and expands 3 to 400 pips below the low, right? Because the low is at about 92. So it expands down to that 88, 92 and 88, right? This is about 400 pips. So it did about 400 pips to the upside, about 400 pips below the low. It takes internal liquidity. Remember, it's going to take internal to external, right? This sets the range, right? This sets your first range. You have your, what you'll have is the accumulation or the original dealing range. Then it sets the second dealing range with an expansion, right? You get here and here, equal highs in here, comes and gathers that internal liquidity, then comes back down for internal liquidity down here, right? And then has the market structure shift right here, short term, right? Short term, body to body. You get the optimal trade entry down here under this low. You want to see it take that liquidity. See how it takes that liquidity, pushes up, right? Accumulates, has the reaccumulation, breaks that high, gives you another optimal trade entry to enter off of, and then again pushes higher, right? Notice where price has came back down and touched that dollar level, right? Then we have 1,000 pips up, right? With another 400 pip expansion above that. So look, these are the numbers. Numbers is what the algorithm seeks. It's seeking price. Remember, it's seeking price, but only with time, right? So this is 1,000 pips. You see where we made a high to create liquidity inside of this range. Above that range, you can mark the 114, right? This is your key level, 400 pips above, right? This is 400 pips above your key level, right? Now the liquidity is down in here. You see how it takes that liquidity, right? So we've gathered the liquidity down inside of this range. Now, this is the idea that you can understand also when price will deliver high probability fair value gaps and things of that nature. Again, what do we have right here? We just talked about this, right? You see how price has this down candle, an expansion here at this dollar. You see how price traded up, opens. Look how it opens above. It didn't opens above the close, pushes back down into this range, pushes up with a close here and a high. What does price do? It pushes back down into this open. Now, what does that make this candle? Sell side liquidity into what? This area here. What is that? from here to there, balanced price range, right? You see that balanced price range. Now down inside of that balanced price range, put BPR, balanced price range. Now down inside of that balanced price range is a objective that we can go to. What's the low of this? The low is 99571. This low is 99578. You see how it doesn't dip below that low, but inside of this range, we can drop down into our 4-hour and we can find what is inside of that balanced price range, because all these things happen fractally, right? Look at this. There was that low we saw, right? What is that? That is your what? Liquidity pool. Look at this right here. Right in there is what? The inversion. We'll make this blue because it's in the 4-hour chart, and we'll just make it 3. That is your inversion volume imbalance. Right? Now here's your down candle. Look at how we got another balanced price range right here. But one thing here is inside of this balanced price range, you see this down candle, these consecutive down candles here, you can mark that for an entry. The reason why I'm saying that is this expansion came out of this area, this one. You can even mark here if you wanted to. You can mark that as an entry, right? And below the 50% of this, or put your stop below that. This is 50%, right? You can mark an entry there. Let's put a buy entry there, and we'll go see how price delivered down into there. We know it delivered down into there because what we already saw the down, but you see how the bodies respected it. But I want to go back and point something out too, and this is what I want you guys to see, how this is also fractal in nature. Look, right? If we were to take this out, we know the expansion came out of here. You see here we had a buy up, breaks this becomes an order block. Now price opens right here, trades down, right? Got a balanced price range inside of a balanced price range. You can go down to your 2-hour and see if you can see a idea in that area, right? See if you can see this idea in this area, right? And you can see this lowest down candle with that, taking that liquidity, and you can enter there if you would like. You can enter there if you would like off of this rejection block. And right there, see that 599? You should be able to enter off of that rejection block right there, right? So we should be able to see entries. You can even keep going down to a lower time frame because of the rejection block, and look inside of this and see if you can get a full body candle down inside of that wick, and most likely it will have a precise entry that it will aim for. But you see how you have the rejection block, right? The rejection block, and then the push up out of that area. But this is just how I look to find a POI for the sniper entry. Again, we did a break of a short-term high. After the short-term high, you see the swing low, swing high, optimal trade entry. Again, with the expansion 2022 model, you get this expansion to the high side for value gap, right? Inside of the for value gap, inside of this for value gap, you get an expansion, right? So that is the review of this. right? We get this expansion out of this for value gap. All right, so um, that is the lesson on understanding this expansion, right? And you can see the internal liquidity was right. Let's say this. I was thinking this was internal liquidity at first, but what I understand is this was a key low. Um, it held our premium pricing coming off of this one off of the key level of 100. Now we go to this daily now. Where we are at in this market is, and I was explaining this level was not taken, this key low. It traded back down into the high of this order block here. Once this was traded through here with this candle, the high of this traded through with this candle, created what? A for value gap. Here is your order block. The for value gap is here and it filled it. The high of this candle is 105.35. The low is 105.51, right? So there is a small little piece left right there. See that little small piece left, but it's still delivered back into this area. What's the low of this candle? 617, and the high of this is 610. So it just missed delivering back into this candle, just barely, but it didn't take that low. I was speaking to my students and I was saying that if we took this low, I believe that would have created us going bearish, right? We would have kept going bearish, would have took the key low and would have reaccumulated and gone bearish. But I believe that there's a reason we didn't take this low. I do believe that we're going to take this low and come back inside of here and expand up. We might not even take that low, and it might be a area that we wait for after this expansion up. I do believe there'll be an expansion up, but let me finish explaining where we are in the dollar. See, we've completed the buy side of the market maker model, right? We already had this expansion up, this expansion down, which left us an imbalance. Now that is because of, here's your yearly open. You had the high of December was right here. So this was your December high. You see these relative equal highs, monthly high creates buy side liquidity. You had this buy side liquidity. Most importantly, we had that buy side liquidity at this area of a weekly fair value gap, right? This is a weekly fair value gap. Let's go to the weekly. See, there it is right there. So you can see here where from this high to that low is a weekly fair value gap. This is a weekly order block here. This is the expansion down. Now, what's significant about this low is you want to mark this low because it is a key level. We won't mark it as anything more than a key level, right? And this is we mark this as the weekly order block near a key level. Now, where is it? Weekly OB. Right now, what makes this a key level? Because this was the expansion down that created what? This. This is your market structure shift right there. It creates the market structure shift. Now it opens, trades up, takes that into this wick, this imbalance wick here, and then shifts to the downside. This is that weekly order block that trades back up into this area before the expansion down. Now, when we go down to our daily time frame, you'll see the area, right? This was your first market structure shift right here on the daily time frame. After this market structure shift, we got our optimal trade entry back up into this is an area of there's an order block down in here because this candle here is essentially a consolidation on the lower time frame. This was your liquidity pools, consolidation, expansion, retracement, right? This is a market maker buy model on a market maker sell model on a lower time frame. There was a volume imbalance right here, this inversion volume imbalance, right? That it traded through. Pool of liquidity inside of there lets you know. Now inside of this, there will be an order block on the lower time frame in the daily, most likely in the 4 hour, something like that. That will be that. Now this low is where we expand it as a break of structure, right? This was the break of structure. Now in this break of structure, we created these up candles 4 days, 1, 2, 3, 4, which created a weekly order block. And then we expanded lower. Now this was your weekly for value gap, right? Now, the weekly FVG delivered back up into the order block and specifically back up into this candle's low. As you can see, this is your consolidation, right, on this time frame. Do you see how none of the bodies left this until here? This was where the expansion or the body pushed through for the break of structure. This is the consolidated area, right? All these candles are truly inside of this candle's range, right? So this candle essentially becomes a very important level, especially on the lower time frame, right? You can see that it will be a key level, right? That was the level that we marked. Do you see how we had a swing low, swing high, swing low to a hard expansion up? This down candle here becomes a 4-hour breaker, right? See that how that look how that body there is the same, right? The closing of that candle is 104,951, right? You can mark the closing of that candle as your entry, right? At that 951 would have gave you a beautiful entry with a run of liquidity, right? And then it proceeds with the market structure shift here, pulls back. Now, what I want to notate is I had spoke with my student about this before this week began and stated that since we deliver up into this weekly for value gap, into this weekly order block, we had a market structure shift. Now, in this market structure shift, there was a few things that happened and why we're going to continue to the downside until we deliver. We have a couple more expanded. This was your market structure shift here, right? So market structure shift, right? So that's our market structure shift. Now, when this candle was broken, this here was our, let's go back to our daily because I want us to see this. This was our daily order block right here. See that whole up candle, daily order block. So we could mark that a daily bearish order block. Now, in this area here, this is another one of those what we were speaking about right here, where we have this candle here. This candle here is very specific and it has a function, right? We had where price traded down, traded back up into what this volume imbalance right here, and then traded down again. Then price open, traded back up into this range, created liquidity. This bar open here. Look how this bar open here, right? Because you have this as your opening, closed, made a high and closed here. Then this bar came down here, opened, right, at this 340 or 104. Oh, I'm sorry. This is my bearish candle. So price open here, trade it up, and then trade it back down. Then instead of where this close is, price came above there, above this opening, opened here, gapped up. So you can see that this is a gap on the lower time frame, a gap on the lower time frame. From here to here is a gap on the lower time frame, and then opens and breaks down. This is an outside bar. Outside bars are very specific because this bar created what? That market structure shift. See how that outside bar created that market structure shift? And then we had this candle here for the lower low, or what creates the um market maker sell model on the lower time frame, right? This will create that from this body to this body, gives you an optimal trade entry. Remember, after the market structure shift, there's always a optimal trade entry, right? You can see there how price delivers back up into that area. Notice how the body still respect that 79% retracement level on the daily, right? Now, I want to go down to the 4 hour, and there's something specifically over in this balanced price range inside of this for value gap area that price delivered into. So let's drop down into our 4 hour time frame, and this will give you an idea of what really happened. Now, so if we look here, we have an area of a 4 hour FVG. Now, specifically in this 4 hour FVG, there is an area that price delivered to. We have been speaking about these the whole time. Look at this. This is our inversion volume imbalance. See that? Look how it's in the premium side of this fair value gap. What do we have here? Liquidity, right? We had liquidity inside of that fair value gap, right? There was liquidity. It ran that liquidity back up inside that inversion fair value gap. Remember, this is where price ran up with that outside bar and then displaced below inside of this displacement here, right? We talked about this gap. Remember this close and then this gap up opening, right? This was that gap opening. See, this was a close. See that 1700? That was a GMT closing. GMT open gapped up, right? Gapped up, created a high, consolidated, and sold off to break the structure. Gives you an optimal trade entry, delivers up into that on a Friday, right? This was news. News gave you the manipulation up into there, and then we closed, right? So you had a Friday close here, I believe. No, it's here, right? So Friday closed here, right? So you can see where Friday close. So this is a previous day low and a Friday close, not a previous day low. No, it is it is that Fridays. No, this is Friday's low. This is the close of Friday. But specific things happened when price opened up. And this I did want to see price um deliver back up into this volume imbalance. This fair value gap right here, but this was a breakaway gap, I believe. And how the way we trade it down and trade it back up, this was the balanced price range right here that allowed us to then, what I spoke about with my students this week, what I was expecting was the low resistance liquidity run. So this is the beginning of this low resistance liquidity run. Now, where I'm expecting price to deliver is if we come down here, this is the sell side liquidity. Let's go to the daily because we can see it on the daily a little bit better first. It's better to lay things out on your daily first. And what we have is the yearly opening right here, right? So remember this candle right here is your yearly opening because I'm going to delete that candle. So you see this here is your fair value gap. We're going to lay this out together and understand this fair value gap daily, right? Let's lay out this daily fair value gap. So you have this daily fair value gap. Now, if you go here, we have an IFVG, right? And a daily order block. Let's mark that also. daily order block right there. And let's put daily order block over here. Bullish, a daily bullish order block right here. Now, inside of this IFVG, we have this volume imbalance here, right? I'm going to make it black because it hasn't delivered to it yet, even though it's on the daily. Matter of fact, we'll make it orange since it's on the daily. Orange is my daily color. This is your volume imbalance inside of a IFVG, where a IF, look at this, is specific now. The IFVG and the daily and the normal FVG overlap. This is your sell side liquidity, right? So you can see the sell side liquidity that's resting here. Daily order block at the end of December with a volume imbalance resting there. Now we can drop down into our 4 hour after we've laid out this. Now, what do you see here? Right? You can see, look at that. You see that right there? That is sell side liquidity down into here. Uh-oh. Sell side liquidity, right? We'll mark that as sell side. That's your sell side liquidity down in there. Now we have a balanced price range here to here, right? With sell side liquidity above it inside of a daily volume imbalance, right? Now we can go down to the 2 hour first, because sometimes the 2 hour gives you an insight that the 1 hour may not. Now look at this down candle, daily, this your imbalance here. So we can mark this as the 2 hour. We'll just mark it with a green support line. We'll say, I don't have 2 hour order blocks on here. We'll just say 1 hour order block, right? Yeah, here we go. 1 hour OB. You drop down into your 1 hour. See what we have down in there. See how we tap this order block here and it created this accumulation, right? So you have this swing low, take a liquidity right there, down candles. You could possibly come down in the lowest price I would be expecting it to come down into is this 1 hour order block. But this consecutive 2 down ones are a consecutive order block. So I would be expecting it to come down into that 101,283 to the 101,255. That should be where our low resistance liquidity run should run to, right? Because we deliver here, we're on the sales side of the curve. Look at this, buy up. I want you guys to see this. Go back in your charts and do this actively. Market structure shift. Right? Market structure shift. This is your 2022 model where it accumulates, hits the for value gap. Then it gives you the liquidity right here. Right? Let's do that. Liquidity. Right? Smart money reversal right here. So you can see right here. I don't think I have any of that here. Call it SR, smart money reversal. Right? This is your smart money reversal. After that smart money reversal and the delivery into what? A higher time frame, POI, right? We're in a high time frame POI, delivers up to the higher time frame POI, immediately runs down and has what? A market structure shift. This is your first stage of distribution. First stage distribution, right? Let's make that red. First stage distribution delivers below this sell side liquidity. This was the sell side, right? So we could look at that. You can see your, shoot. You could look at that sell side IRL. What's IRL? Internal range liquidity, IRL. Now this was a February low. This was the low. This was January. This was February's low right here. So you could look at this right here. And this is a previous, not a previous weekly low, but it's a monthly low. Monthly low, which is February. Your monthly low. We should trade back up. We can look in at here and see what kind of POIs we have here. Let's go up to our 4 hour, right? Up here, right? And we should be expecting how we have this high for value gap. Come back up into here, this breaker area here, and deliver down. This should be your second stage distribution, and then a delivery to the downside. So I'm expecting a comeback up into here. I don't believe that we should deliver above this candle's range here. I'm looking at this candle's opening here and this candle's closing here, right? Between that range, we should deliver between that range as we trade it down, open, trade it up. We should be able to maybe spot a POI inside of here. Let's make it bigger and see if we can spot something here. Right, this is a balanced price range for value gap, buy side liquidity. We had a smart money reversal. Let's go down to the 1 hour and see if we can see this here where it traded down, traded back up, traded up. This is your liquidity. Up candle there is the liquidity inside of this range. Again, here's another for value gap. We could possibly trade up into this, but I'm not looking for that. I don't believe we'll trade up into there, but that is a possibility. But this is your liquidity. I'm looking to just trade up into, let's see here, into this range. And I want to go down to my 15-minute and see what we have there. Now, see how we have this. So I would possibly look to probably just trade into this candle. But again, like I stated, this is a possibility because we had this down and this could be the liquidity here. And so I have two POIs on this, here or here. If we run through this, let's go to the 5-minute. This should tell us because this is our liquidity. This could very well just be a breakaway gap, but this high here could be liquidity right here for this fair value gap. So we could have two stages of liquidity right here, and the low, that area that I was stating, is here. So you're in between here and here, right? Just behind that body. So I am expecting price to take this buy side, buy side, buy side, maybe even this buy side, but we have this down candle here. This is your market structure shift, equal highs right there. So we probably will deliver up into this 103, and that's at your 103. So probably will deliver up into that 103. maybe at 103, 100, somewhere up in there. And then we should have a low resistance liquidity run um, to the downside, right? So this is what I'm looking for: a low resistance liquidity run, second stage distribution down into this area, right? Let's write that here. Text. This is going to be our LRLR, uh, LRLR right there, right? That'll be our low resistance liquidity run. So let's take a look at our calendar for the week. Oh, it's not going to be here. It's going to be here on this app. Let's take a look. Friday. So Sunday, JPY has its GDP. So I'm looking for JPY to deliver nice. We have GBP. There's nothing on Monday. Looks like no red folders. So looks like we'll have a light Sunday, opening Monday. We had CPI on Tuesday. Tuesday should be the high of the week or the manipulation. Wednesday or Tuesday at 101, you should see the smart money reversal and the 10-year auctions. And then Wednesday at 101, you should see another impulse for the 30-year bonds. Thursday should be your continuation with the core PPI. You got all these PPIs, unemployment claims, and Friday we should have our delivery down into there at 8:30 with the Empire Manufacturing State, and this most likely will be the reversal down into that range, right? And even as we go into that, I would expect that maybe even these giving us something later on next week. But for this coming week, I'm looking for this low resistance liquidity run with a high on Tuesday. Most likely we'll have a consolidation on Monday. Sunday and Monday should be a consolidation day. Tuesday should be a manipulation day to create the high of the week back up into that delivery. If it already has delivered up into that range when we come into Tuesday, this 8:30 will be the break of structure or the market structure shift. The 1 o'clock will be the continuation to the downside for the low resistance liquidity run, is what I'm expecting. So we shall see how price will deliver this week, but that is my expectations for price to come up into here with a second stage distribution, right? And I'm looking forward to take these couple areas of buy side liquidity and then have a shift with a run down. So you guys got a lesson on understanding the market structure. As you can see, we are in a if we go to the higher time frames, the 4-hour time frame, you can see the market maker buy model that we're in coming back down into the original consolidation right here, original consolidation. And then we should deliver to the upside to take out this internal range liquidity because we are within this scope. I want you guys to see this. So this is internal range liquidity from $1 to 110, and right above that is still internal range liquidity. This is our range, took that low, pulled in liquidity. It didn't take the liquidity here. Now we could run through this and take this. That could be a possibility. I'm not saying that it can't be, because this could be the low that it created so that it could run into this bullish order block that we talked about right here and close that fair value gap, right? So that could actually be a possibility to run this low here, but I'm expecting a delivery at least down into here. So I'm not saying that this can't be a possibility where we run that low, but we do have liquidity here where we don't have to run that low, and that it could be something that comes back and gets gotten later. But I'm expecting it to run here, at least to here. right? And I would expecting a smart money reversal. I would be expecting a reversal because we did have one here, reversal, come back here, internal range liquidity. Then I'm expecting external range liquidity, right? I created this range, external, internal, internal, external, right? Because it's your smart money reversal. This right here was your market structure shift, comes in with the optimal trade entry, gives you a second optimal trade entry. And then we have our impulse to go into Q2 with a run up into this side where this imbalance is here inside of this range to fill these numbers. I feel like that we have to fill these numbers, right? So that is my expectations for dollar for this week and for the rest of Q1, right? Um, we'll take a quick look at euro to have that idea. Let me go to gold first. With gold, I'm expecting, let's go to our weekly, monthly, right? We've had a great expanding month on gold with it reaching new highs. So with gold, you could look at your 2000s, right? We're about 200 and no, let's see here, 2000, here 2000 level. Let me mark that. All right, so we'll mark this 2000 completely. All right, 2000, right? So we're looking at right here at the 2300 level, which is about, or 2400 level. For 100, right? We have this level. We are within this range here. And I'm saying that because our last range, let's see what our last range was. And it was from here to here, which is about 400 and let's see here. I'm sorry. It's about 4,000 pips. I said 400. This is our biggest range right here is 4,000 pips. So I would expect this range to be delivered somewhere on the upside of this up into like that 350 area or something like that, like that 300 level. As we make new highs, I'm at least looking for it to deliver up into the premium side of this area. And I'm marking this because I'm looking at the 200 level of this too, right? We want to get the actual 200. Right. Let's see. 2200 level. See, we're almost delivered up to that area. Right. So I'm expecting at least premium pricing up into that 400 level. This is the range that I'm looking at and dividing this because our 20, 40, 60, and 80 levels are very key. Are very key in gold. These are our key levels. See how we keyed off that 2000, kept that at a cap, keyed off of it, going up to that 200. See how we deliver into the premium side of this. I would expect us to open, push down maybe slightly up into this, and then expand up into the premium side of that range also, right? That's in our monthly. Because we're just we're like right at the beginning of our month because we're only in the 8th. So I would expect us to continue with that, and we can look at the range here, right? 50%, 75% will be right at that 300 level. You see, we're looking at about that 300 level. That's that 75%. That's a good premium to look for, price to have a reversal in. And we can look how we had this big week to expand up here out of this range. You see how we delivered up near that 200, right? We go down to our daily and look at the expanding range there where we created a trade up, came down, closed, open, traded here, and pushed up. So essentially, we should see that we have this high here that we keyed off of, right? This high is going to be very important. Let's mark that high, right? And look how it's at that 150 level, right? We had this area where we traded here. I don't foresee us coming all the way back down into here. We could. I'm not saying that we can't retrace back down into here, but just looking at the structure of this market, even this is, I would look at this here as the area of balanced price range right there on the daily. This could possibly be, but that for value gap there and this one here, we could be magnets, right? For price. When we shift down, what I'm looking for, see what we've done if we respected all these down candles. Look how price came down into that down candle right here at that high, traded off of it, came back down into this candle here. This was that Friday trade. It was ill. It pulled back down in here and traded up. Now we do have some lows to maybe come and get here. We can look on this 2-hour, see and see down in this balanced price range. There's that for value gap right there below these down candles. So this could possibly be a factor. I'm not sure the delivery on gold yet. But we'll see how this week opens up, right? Essentially, that's what I'll be looking for, is how the week opens up. But I'm looking for a buy on gold. It's just where exactly we're going to get in. I don't know yet. I'm not sure. This candle here is kind of like a range that could, make a difference, because this is an accumulation, broke out, pulls back into these down candles here, these rejection blocks. So, here on this 15-minute, you got this down candle here that it traded into. And you can see here, down candle that it traded into, bought up and closed. So it's just going to be interesting, because this could be a liquidity. They could use this as liquidity, that as liquidity to come back down into here, maybe, because this is a market structure shift. They can use that as liquidity and come down into this for value gap right here and use this order block there. I'll just say buy entry on that, right? They could use that to buy off of, right? So this could be sell side liquidity. Come back, take those stops here with a 200 pip drop right there on a manipulation, right? The Tuesday low of the week, manipulate that down into there because it's consolidation, right? Smart money reversal, second stage distribution, low resistance liquidity run. So, and then pull back up, take out these equal highs. See those equal highs? Leave those equal highs there. Come back Wednesday, take those out to then again go up into this 2200 level. right? That's what I'm looking for on gold. Let's go down to our major currencies. Let's start with euro dollar. Again, let's start at our daily. You can see this is pretty much mirroring our dollar as we had this daily order block here met. Right, this was your expansion, the break of structure to come back up into this, created internal liquidity, had a liquidity run, right? Break of structure comes right back to it with this swing low, swing high, swing low. This is your breaker right in here in this area of this up candle here. Had this breaker, right? Order block right there. Another daily order block, right? So you had two bullish daily order block objectives met, right, with those mitigations. Now what we can see here is a daily order block with a for value gap down in it, right here, and then just above that is this balanced price range here, this daily. In this daily, right? This is a balanced price range here. And so we should possibly be able to go down into that and find an area that we can key off of, right? But I'm expecting a delivery up into there. This is most likely your balanced price range here. We had this complete down candle here, right? Before that, you can mark that here, key high right in here in this area for hours. See that order block there with this bullish engulfing. I'm looking to buy off of that level. We could go down into our 1 hour. There's your 1 hour order block right there. Bullish 15 minutes for value gap right inside of that internal for value gap. So you can expect it to close this for value gap right in here to come into, let's see. Okay, move forward again. Balanced price range right there, right inside of a higher time frame balanced price range, right? Go down into your 5 minute. See if we can find an order block there. Down candle right there. The high of it is right there. So for value gap, I would just stick with this right here, that 108.902. Or yeah, I'll stick with that. 108.902. I like that. I don't foresee us coming down into deliver into this gap here. Could be a possibility, right? We'll just have to see how price reacts, but I would like to see price just buy out of this zone, being as this is that swing low, down candle, balanced price range for value gap. I would rather see that with this IFVG here. I would rather see this buy up here. So I'm rather looking for it to buy right here, right? This 1 hour order block. Now let's go to GU. Right, let's go to the daily. And let's see here. You can see where we delivered on the daily, right? Same idea. Down candle. Your daily order block is hit right here, right? You had a rejection block right there. Buys up. Comes into a balanced price range again, right? In here. right there. Balanced price range. Order block right there. It's your daily order block right there. Right. Pushes out of there hard. Gives you the daily order block again. You can see how all these down candles are being respected. Every down candle is being respected. Daily order block, right? Got one here too that it respected. Once it pushed down into here, created another daily order block right here, right? And out of that daily order block, we have broken market structure. This was your market structure shift, right? Optimal trade entry right here where the order block is, right? Expansion to the upside. We broke that. Got a for value gap here with this complete down candle. You should be able to buy out of that range, right? And we got this up, trade down into this range. You can see from here to here is a balanced price range, even including this high, right? Another key daily high, right? So you could, where are we expecting price to deliver? This is your buy side liquidity right here for value gap, balanced price range up here, balanced price range, daily order block right here for value gap. It's your daily bearish order block right here, buy side liquidity, right? BPR, balanced price range. So we know that we're going to deliver up into there. We'll talk about specifics later, just understanding the delivery where it is going to come. There's your daily or 4-hour order block that I'm looking for it to deliver out of that for value gap right there. So we could look for a buy entry there. Let's put buy entry 1 hour. Could you get a tighter one? Nope. Look at that. You could probably right there at that high, even going down into maybe the body, but this high is good. Stop goes below this. Put your stop below that low. That's about 20 pips stop. And again, we be looking to deliver up into that range, right? So we got accumulation, right? Push up, sell side liquidity right here, internal range liquidity for value gap, order block. So you could wait for price to deliver down. We've already delivered up here. Most likely we should have a smart money reversal when we went up, pushed down, right? Traded up into this for value gap. So it'll be interesting to see how price holds off this level, maybe even take this high, right? It could possibly take that high, but I will see it. Maybe not deliver up here and then push down, right? This was December's high right here, or right here, December's high. But what's key about this is we can go to the weekly. This is an accumulation right here inside of that. If you went to the daily, you can see the accumulation, right? This high, this low, body state within it. That is an accumulated range, original consolidation, whatever you want to call it, accumulated range. Right there is your rejection block, the highest one right there. Right, let's mark it. Rejection block. Let's do daily. I want you guys to get this into your head. I got rec. Well, let's do daily order block. Negative. Y'all do understand that is a daily rejection block. Daily rejection block. This is the liquidity that it ran right here. That was your liquidity, right? For the actual POI liquidity, right? Shift in market structure right here at that daily low there. On the daily time frame, you got the shift in market structure. Notice how it closed below that low, or I'm sorry, it didn't close below it, but it's right there at that low, right? How it's right there at that daily low, right? And this was a big consolidation also. You see that? This high, this candle here was a big consolidation of this range. Took the high, took the low inside of this range you have. Then we should have a low resistance liquidity run again, right? This is your setup for the low resistance liquidity run, right? And you can see the compression here, the compression. What you look for, you're looking for compression, right? 0, A, B, C. Shoot, let me get the thing out. 0, this is 0, A, B. This will be oh man, where's my thing? So I can do it. There it is. This one, internal. No, that's B, C, D. I messed it up. That should be B, C, D, E, like that. Wait, I'm sorry. There's your compressors range. Then this is the A, B, C, right? You can get an A. Oh, shoot. Started, hold on. A. It's not giving me what I want. B. C. It didn't give what I wanted, but yeah, essentially, you get what I mean, right? It's the compression. It's a consolidation. That's the whole idea. I'm sorry, I didn't. It's like 12 o'clock. I've been up for a long time, so I'm sorry I didn't lay this out right. I'll identify it for y'all and let y'all know what it is, but it is essentially a compression or a consolidation back up into a POI with a stop run at December's opening range with a rejection block here, right? We had the run of liquidity here with a higher time frame breaker right here, right? Lowest down candle before the up run, right? This is your breaker here, right? So you had a lot of things in this area. Look how bodies respect the middle of that breaker. We hit it. Daily order block, daily rejection block inside of that. So a lot of things happening. Sell side liquidity, just like the other ones. You have your sell side liquidity, daily order block to deliver into. Balance price range on the daily. There's your down candle. Right there, see a down candle, swing low. I will mark that. I would like price to deliver inside of that. And go to the 1 hour. Right, the original accumulation right here. I would like that. Good movement. I would like that right there. So I would look at this. Let's put buy entry there. Right. So that's what I'm looking for on where dollar should buy next, but this should be a low resistance liquidity run down into here, right? Definitely should be a low resistance liquidity run. And remember, we had this stage of accumulation here. So we could look for price to trade maybe up inside of here somewhere or there, right? Maybe to take this liquidity here and then again trade lower. But you got a swing low, swing high. You had swing low, swing high, swing low. Then it had a liquidity run with the smart money reversal. So you could look at this as a breaker, or you could also look at this as the main break, lowest down candle right here. Breaker delivery back up into there with liquidity, right? Have a liquidity pool here, right? So we could expect price to push up into this area, maybe up into this rejection block or something like that. And you got a what's called a mitigation block here. Swing low, swing high, swing low, swing high. Take a liquidity and a push down, a break structure. So you got a couple things up in here, right? Breaker. Let's mark this. Breaker right there, right? Consolidation. So we should see a low resistance liquidity run, right? From all the way down into there, right? Excuse me, guys. Excuse me. Let's go over yen. Yen has already had a significant movement. Yen has been coming back to run these lows and things in the range that it's in. Overall, yen is bullish. I just want y'all to know that. Overall, yen is bullish, but we are inside of a range here, right? We're inside of this range to here. This is our range. There's internal liquidity there. Got this down inside of, right here. Balanced price range on your monthly. So you could expect to seek this internal range liquidity here, right? It's your previous monthly low. It's your internal range liquidity, right? Internal range liquidity of this range. This is your monthly order block right here. We'll put it here. Reason being it here is because this low is here, then here. This opening to this low is a balanced price range on the monthly. Low to there, balanced price range on the monthly, right? Internal range liquidity, internal range. Let's go monthly order block, right? Go down to your weekly. Notice how we hit liquidity, daily order block, right? There's your daily order block. It respected the 50%. The bodies respected the 50%. Where's the, let's see here. See, 50%. Go respect, ran to the low, right? What did you see here? Market structure shift on the weekly right there. Not a breaker structure because we took one swing low, two swing lows back into this, push back up, right? This is your market maker sell model, smart money reversal here, right? Original consolidation right in here. See how we had the original consolidation right there? Make that gold so we can see that original consolidation. Where's say golden zone? God, right, there's your original consolidation right in there. It's on the weekly. Go down to the daily. Should be able to find something. There's your daily order block right there, right? You got another one right here, but we hadn't quite reached that, but it's here. Again, up in here, you traded down, came up a little bit. So from this low to this high, is a balanced price range. This essentially, that little wick inside this candle creates liquidity, right? So you can drop down to your 4 hour inside of that daily order block we were talking about. There's your area of liquidity. You can look at this here, rejection block right there. The wick coming up off of that creates a rejection block on the weekly right there. See how prices holding into that. We actually push past that really in reality, right? You did have a for value gap here. Also have a swing low to the swing high. This was your breaker structure. I know we didn't come into that. We came into this IFVG and maybe even this FVG. I didn't even look at this. I saw it, but I was focused on gold before I even traded this, right? So we didn't even come up into that FVG. I figured we didn't because I didn't see it. And I think I had it marked out with an alert, but we came up into that IFVG, like it delivered to it almost perfectly. The high of that is 158.87. See, delivered just like one pip below it, right? One pipette below that. Anyways, he gave you the consolidation, right? The market structure shift comes back. Well, this was your market structure shift here, pulls back, another optimal trade entry, and then it runs low resistance liquidity run. It started, right? This is your breaker structure. 1, 2, 3 breaker structure. So most likely price will hold somewhere up in here, accumulate and continue its run to the downside, right? As you can see, your sell side liquidity, the imbalance right here, right? So your sell side, this is your accumulation, reaccum, small accum, that's your smart money reversal right in here. As it runs that high, give you this lower low, which is the market structure shift here to here, market structure shift. See it right there, pulls back, market structure shift. This is your break, market structure break. Maybe come back up into there, but we should sell down into this sell side liquidity here. This is your sell side. So we know that dollar is going lower and that they're seeking a liquidity to reprice on all the others down. So that means that on the indices, you should continue to see higher highs, right? As we keep pushing higher and higher on this weekly, we could look for an objective, right? So we know that we've come here, right, into this for value gap, traded into it and pushed out. So we see what a smart money reversal is, accumulation. So you could look at it like this and maybe make a projection, right? This is your breaker structure. So you could look at 0, 1, 2, 3, 4. Then you should have 3 waves here to create 5. But from here to here, we should be able to get an idea of like a 1618. Let's see here. Let's get the. Oh, I'm sorry, guys. Let me. So we're doing projections. When you do projections, you want to reverse your fibs. So from that high, so we can do with bodies and all that. But here's your 1618, 1718. So I would be anticipating it to break the 19,000. I'm sorry, 19,000. We should at least see a 19,000 higher high is what I'm anticipating. And then above at 19,000, right? We could even see it come into that 20, because that means it will be delivered from 10, right? Look at that, from 10 to 20. And to your, let's just go with this and make it 20. It gives you even stats, and then uh we're in that premium range, right? And if we can pull some fibs, maybe from the low to the high, that 1618, we just do the highs instead of the body. We're still gonna do the low and the high. Look how it matches up to that right there. See, it's really close. Fib level gives you an idea of the projection, and this is the projected range I'm looking to deliver up into for the higher highs, right? For the indices. So we should at least deliver up into some higher highs up in there like that, right? At least looking for that delivery on the weekly, right? So we know that we're buying. Now, what just happened is here we had this buy up. Weekly order block right here was created, and we traded down into it. Right? Go down to your daily. There's your weekly order block that we traded into, accumulated daily order block right there. Didn't take the low, had this daily order block down there. So I'm still expecting this. We'll just have to see how price gives us what we want. And actually, price has delivered down into this for value gap, down into this. So we could possibly expect a buy up already on the indices. Price could here and consolidate and then buy up. We shall see. But you do have a little small gap below this and some liquidity. So there could possibly be a liquidity run at the open of this. But we'll see. I don't know for certain. We'll have to see how price opens up. I do see some POI. Sorry, guys, I'm running through this. A little tired. Right there, you can see how it delivered down into your 4 hour. Again, we have the same type of market structure here on the Dow, right? See how we had that reversal right there. The reversal here. First, it's your second, it's your third. 1, 2, 3 should be there. We're looking at that 40,000 mark. Right, your 40,000 mark. And you see how we keyed off this 30,000 mark with the reversal. There's your range, right? Internal range liquidity. We're up in there compressing, and then we could pull back, catch this internal range liquidity. But I'm looking for a deliver up into that 40,000, right? Now your weekly, you can see we truly did the same thing. Swing low, break higher, order block. It's your weekly order block. Go down to your daily. It's doing the same idea, kind of like, right? We should come here and accumulate inside of this Monday, Tuesday. Then we should push, right? I'm sorry, guys. I've been trying to close that. S&P should be about the same idea. right? We've already crossed the 5,000 mark. So we should be looking for like 5.3, 5.250. This is 5.3. We look 5.250, all that type stuff, right? What do we key off of down here? See, we keyed off that. We keyed off the 150, the 100 down here. We're already at the 100 there, but the expansion happened. We could do the 250. Even here, see, that's where the reversal. We could look at the reversal at the 4,200. So we could look at it delivering up into that 5,200 at least. So you should look for it to at least deliver up into 5,200 as it pushed off of the 4,200 as a at a discount price. Right there's your price right there, and then pushing up into this range. We may even push higher. Interesting. Probably I'll go to that 5,400, right? But this is my market outlook for this week and what I'm expecting. You saw the DXY. Next time we're going to go into a deep dive. Probably tomorrow I'll do a deep dive on time algorithms and things like that. How I perceive this time algorithm. But this is my market outlook. I hope it was clear and concise. You have any comments? Yeah. If you have any questions or comments, y'all comment below. Let me know what you would like to see on the next one, what pairs you would like to see, and we can move from there. So until then, God bless, and y'all have an absolute wonderful day.